Hi, my name is Maddy Aubry. I'm a senior in the Applied Investment Management program at Marquette University, and today I will be presenting Group 1 Automotive along with my mentee, Ryan Cry. Group 1 Automotive operates in the automotive retailing industry. The company operates through the following sectors: new cars, used cars, parts and services, and finance and insurance. The company operates approximately 237 franchises representing 31 brands of automobiles at 184 dealership locations and 49 collision centers. Group 1 Automotive's franchises are located throughout the US, the UK, and Brazil. The company was founded in 1995 and is headquartered in Houston, Texas. Coming out of the COVID-19 pandemic, Group 1 has had a strong recovery in 2021. Currently, AutoNation leads the industry in terms of market share while controlling 2.4% of the market in comparison to GPI, which controls 0.8% of the market. GPI is expected to increase this market share as they grow through acquisitions as well as their online retail platform, SellerRide. With SellerRide, GPI has been focused on allowing customers to buy, trade in, and sell new vehicles online. Also, it has recently become favorable for in-dealership experience as well by creating transparency, increasing professionalism, and saving time while customers use the platform to complete various purchase requirements as well as payment. GPI's brand mix is diverse to reduce the risk of evolving customer preferences with brands such as Toyota, Ford, Jeep, Audi, BMW, Lexus, and Jaguar. Their parts and services segment is at the heart of their business, generating about 45% of the firm's total gross profit. GPI operates in 14 states across the United States, and in Texas alone, they operate 56 franchises that represent 37% of Q3's total new vehicle unit sales. GPI is focused on expanding business in Texas due to the state's growing population. For example, in October of this year, GPI acquired 2 dealerships in Denton, Texas. GPI's management team has been able to execute a growth strategy and profitability. GPI's adjusted EPS and free cash flows since 2014 have been growing at a 20.6% and 25.5% CAGR, respectively. Due to GPI's strong acquisition growth strategy, the opportunity for a roll-up business, the many advantages and increased use of their online retail platform, SellerRide, and the built-up demand for new vehicles coming off the pandemic and supply shortage, it is recommended that Group 1 Automotive be added to the AIM Small Cap Fund with a price target of $258.12, representing a 35.15% upside. GPI operates as a roll-up business by acquiring dealers as family-owned operations age out. Over the last 5 years, GPI has been focused on growing their company through acquisitions with their capital allocation. From 2016 to 2019, GPI completed an average of 18 franchise acquisitions each year. Due to the COVID-19 pandemic, there were no acquisitions in 2020. However, in 2021, there have been acquisitions of 17 franchises, which equates to acquired revenues of $665 million. These acquisitions include U.S. franchises in California, Massachusetts, and Texas, as well as 9 UK franchises in and around London. Total expected acquired revenues for 2021 are expected to be in excess of $2.5 billion. GPI has entered into a purchase agreement with Prime Automotive Group that is expected to close in November of this year and generate $1.8 billion in additional revenues. Through the completion of these acquisitions, GPI has also been able to complete dispositions of underperforming franchises to control operating costs. SellerRide is GPI's state-of-the-art online retail platform that was introduced to their US dealerships in 2019 and their UK dealerships earlier this year. GPI's superior omnichannel has helped GPI expand their footprint with majority of 2021 SellerRide buyers being new to GPI. This platform has allowed for a much lower cost structure and higher efficiencies online and in dealer. Also, with little inventory on hand, SellerRide has allowed customers to finalize transactions on in-transit inventory. In October 2020, they introduced their SellerRide platform that allows customers to submit their vehicles for an offer online for GPI's dealers to purchase their vehicle and provide payment through Zelle, which is a differentiator for GPI. This aspect has provided great advantage to GPI through the sourcing of used vehicles, which was up 30% this year from quarter 2 to quarter 3. In 2021, retail sales growth for a SellerRide has been over 100% quarter over quarter, and there have been an increase of 68% units sold year over year. Overall, a SellerRide allows for greater flexibility and convenience among buyers and has been becoming a more favorable option to customers. Due to the pandemic, people were generally not leaving their homes as much, therefore the need for a vehicle was not prevalent. As people began returning to work and re-engage in other activities that require transportation, the demand for new and used vehicles increased. Additionally, as people again are using their vehicles and traveling more often, there will be a continued increase in collisions and the need for servicing. This will be reflected through the products and services segment. In quarter 3, 2021, after-sales revenues were up 15.5%. Also, due to the component shortages, manufacturers have been unable to complete the builds of new cars. As the component shortages are resolved over the next year, people who have been waiting will return to the market in search of a new vehicle, which will further accelerate revenues. To reach an intrinsic value for GPI, a 5-year DCF model was created. Using a terminal growth rate of 1.25% and a WACC of 10.55%, an intrinsic value of $264.38 was reached. A sensitivity analysis of the terminal growth rate and WACC of plus and minus 50 basis point ranged from $209.15 to $308.39. Additionally, an EV to sales multiple valuation was calculated using a peer multiple of 0.61 times, resulting in a relative value of $254.83. Finally, a PE multiple valuation was calculated using a peer multiple of 15.64 times, resulting in a relative value of $242.62. By weighing these models 60, 20, 20, a price target of $258.12 was reached, representing a 35.15% upside. The firm pays a modest dividend that yields 0.1%.
The 3 risks we identified for Group 1 Automotive were the semiconductor shortage. Recently, there has been a shortage of semiconductors needed to produce cars. Group 1 Automotive could be affected by the shortage due to a lack of inventory to complete vehicles. Second, the movement to electric vehicles. With the looming transition to electric vehicles, Group 1 Automotive must adapt to changes in the industry. If Group 1 Automotive fails to adapt to the transition to electric vehicles, they may fall behind competition. Lastly, foreign market risk. With 19.3% and 2.3% of the company's revenue coming from the UK and Brazil respectively, exchange rates would affect their profit margins. Economic and political conditions in the UK and Brazil could also affect their success. Management. Earl J. Hesterberg has served as the president and CEO of Group 1 Automotive since 2005. Mr. Hesterberg previously served as Group Vice President for North America Marketing, Sales, and Service for Ford Motor Company. He also worked in a similar position with Toyota and Nissan. Daniel McHenry has served as the CFO and Senior Vice President since 2020 and served as Group 1 Automotive's UK Finance Director since 2007 prior. Daryl Kenningham has served as the President of U.S. and Brazilian operations since 2017.
Due to GPI's strong acquisition growth, their state-of-the-art omni-channel SellerRide, and the built-up industry demand, it is recommended that GPI be added to the small cap portfolio. If you have any questions, feel free to reach out to me at the email provided.